All right. Hey, testing, 1, 2, 3. Hi, guys. My name is Dr. Greg McLeod. Welcome to Bulls versus Bears Weekly Forex Forecast. And it's so good to be with you here on this wonderful. Actually, we're a little late. We're starting on a Monday. But this is a very big week. I didn't want to miss this week to tell you about what's going on in the markets that could dramatically impact your trading. So thank you for being with me on this live stream. I wanted to make it very special, do a live stream so we could look at the actionable items. We have central bank announcements that are um, huge. They're huge. Interest rates are the biggest drivers of movements in the market, whether it be stocks or bonds or commodities or currencies. And so we've got some big ones. We have the FOMC. We have the European Central Bank with an interest rate announcement this week as well. And it was also a shortened month, I mean, because of the holidays, we're going to have light holiday volume trading. And so we're going to be looking at that. So let's go ahead and dive right in. Let me go ahead and share my screen and let's get right to what's going on here. I'm going to share screen number, what's the screen number 1, right? We'll just share a screen. And I hope you guys are having a great day. And share screen. So I share screen 1. And we're going to go like that. And I'll move over here and we're going to, how you doing? Okay, this is brought to you by Elite Traders University. Elite Traders University is the best place to learn how to trade professionally in the shortest amount of time without all the complexity, all the all the confusion and frustration. We make it very easy for you to follow a proven system to profitability. In fact, I'm also doing a special book release. We're releasing the Gold Rush Blueprint, the world's greatest side hustle for busy people. That's my new ebook that's coming out. It's going to be on Amazon and also be available to you as well for sale. So the Gold Rush Blueprint is 152 pages of the very best information about trading gold. Recently, gold has hit an all-time high, and as central banks continue to stockpile gold in preparation for the new world currency, the BRICS currency, gold is going to play a big part of that, and we can see it's being a bigger part of people's portfolios. And we can see that it has a lot more to run, even though it's doing a little bit of pullback right now. But the Gold Rush Blueprint, that's my ebook. And we have a very special membership class of courses and seminars around trading gold. Okay, so look for that. Okay, and let's go ahead and get this weekly Forex forecast. Bulls versus Bears. So good to be with you here on this marvelous Monday. A little late with the Bulls versus Bears forecast, but let's go ahead and get that done. Before we get started, I want to direct your attention to the risk disclosure on your screen to make sure you understand all the risks associated with foreign exchange trading. Okay, and let's go ahead and move on. And I've been doing this for close to 30 years. Where does time go? It flies, right? So I've traded everything from options, futures, stocks, forex, and crypto. I'm one of the foremost authorities on short-term day trading, known as scalping. Is the fastest way for people to compound their profits and not having to wait for years and years to make, to make a gain on their money. They can compound using our compound blueprint, and that's a very powerful method of trading. And so I've created various systems, including the Gold Rush Blueprint, the Pip N Run Forex scalping system, and the Trend Spotter indicator, and also the My Market Heatmap, which you're going to see next. Okay, all this is to say to you that I work for one of the largest Forex broker dealers in the world, and I have also worked for a top tier bank and some other brokerages as well. So I've been around the block and have a lot of experience that can help you shorten the curve toward your professional trading career, making money, right? Not making it as a hobby, right? Okay, so let's go ahead and get to it. So we're going to use my top secret trading tool, My Market Heatmap. I had it programmed myself. It's an arrangement of currency pairs and other instruments by percentage change. You can access it for free. Just go ahead and go to the front page and scroll down, and there are your heat maps. We see green is in an uptrend, red's in a downtrend, and gray stay away. And notice that these, the pairs where we're having some big central bank announcements kind of holding their own, right? It's also 5 p.m. as well. All right. So let's go ahead and if you see the economic calendar, it's this bar right here. You just probably have to refresh your screen, click show more, and there you go. And then we have a lot of high ranking stuff that's coming out later on anyway. That's probably why I wanted to do this a little bit later. We have some of the high, and there are only the high impact things that are coming out Thursday, or Tuesday and Wednesday. Well, most of Monday is gone. Okay. But we're going to have on Tuesday, we're going to have the UK claimant count change, and that's their employment numbers there in the UK of 17.8 thousand, looks for a drop to 15,000. And we also have some unemployment rate data coming in too. They're expecting unemployment to tick up from 4.2% to 4.3%. Now, the way I use the economic calendar, and don't tune out on me, because if you're a technical trader, you probably say, I don't want to hear about all these funny numbers. But I'm looking at the flags. I'm keeping it really simple and really basic. I used to teach middle school in South Central LA. So I keep things really basic for people. And so I'm looking at the flag, and that's telling me what to trade. Okay. This is there's a show within the Big Bang Theory with Sheldon and his girlfriend and Amy, and they have a show called Fund with Flags, or Fun with Flags. I call mine Fund with Flags because we're going to make money, funds with flags. We're going to look at the flag, and that's going to tell us what we should be trading. Okay. The flag is, here's the Union Jack of the UK, the United Kingdom. The pound is the oldest circulating currency, almost 1,000 years old, and it's still in circulation. And guess what? That flag is telling me that that's what I want to be trading tomorrow at 2 a.m. Eastern time. And so this is telling me that that's where the action is going to be. That's where the big boys are going to be. That's where the volatility is going to be. That's where the action is. That's where the party is going to be, right? So if I'm going here, I want to trade the Canadian dollar because it's my favorite currency pair. Well, no, it's not going to work. Why? Unless you're trading pound cat, right? Because we want to trade what the flags are, because that's where the interest is. That's where this is what they're going to be watching for. This is like Clarence Beeks in the crop report, right? We're just waiting for this news to come out for the pound. And so, but at 5 a.m., you can go ahead and look at the euro. And the euro is going to have some stuff too. We have the German flag, which is part of the Eurozone, and the ZEW economic sentiment survey comes out at 5 a.m. And so they're expecting a drop from 9.8 to 8.8. So we're going to look at the euro too. So we want to create a basket of currencies to trade on that Tuesday. We can put the pound in there. We can put the euro in there. And then we have a lot of US data. And this is very, very important data, because what's on everyone's mind is inflation. They're looking at inflation. They're looking at high prices. It's affecting everything that we buy, from eggs to soft drinks to cars and houses, and everything is about inflation. And so interest rates are going up because they're trying to fight inflation. So if they can see inflation drop, that could impact the US dollar. And since all these currencies are traded against the US dollar, it's very important that we find out about this inflation picture. So at 8:30 tomorrow, December 12th, is going to be a huge day for the market, because we're looking at the United States. That's the number one, the largest economy in the world. And that inflation data is really going to determine a lot of things. So you're going to have the inflation is supposed to drop from 3.2 to 3.1%, still above the 2% target of the Fed, with the core inflation rate year on year, 4%. And the forecast call for 4%. Core inflation rate month on month. When we say core, we're talking about inflation minus food and energy. I use food and use energy. I don't know who doesn't use food and energy, but we see it ticking up from 0.2 to 0.3%. Inflation rate month on month, or MOM, month on month, supposed to be 0. So that's very interesting. 0. That's below the Fed's target of 2%. And US CPI, that stands for Consumer Price Index. And when I say I look at inflation, And we can see that it's going to drop. It looks like they forecast to drop from 307.67 to 306.9. Okay. So all in all, it looks like it's going to be a tame inflation number. And so if it's down, then the Fed doesn't have a reason to hike rates. And if they don't have a reason to hike rates, then the dollar falls, and all the currencies against the US dollar have a tendency to rise. Now, what would throw a spanner in the works if these numbers actually are higher than forecast, then we would see that the Fed will have to keep rates higher for longer, and that would support the US dollar, causing the dollar to rise, would mean that other currencies versus the US dollar, like the Australian dollar, pound dollar, euro dollar, Kiwi dollar, and CAD dollar, would drop. Currencies like the yen and Swiss franc would probably go up. Okay. So moving right along, we do have some Japanese data. I don't really like trading Japanese data. They do a lot of manipulation and things like that. Um, and so sometimes good data makes the yen stronger, sometimes it makes it weaker. And so there's no real edge in that. And so I usually avoid that. So even though we have a Japanese flag here, we can go ahead and ignore that. Okay. But you can go ahead and try it on your own and see, well, Greg, I don't believe you. I'm going to, don't take my word for it. Try it, right? Wednesday, December 13th, we have more UK data. We have the GDP, which stands for gross domestic product. MOM stands for month on month. They're comparing the previous month to the month before that one. And again, the GDP is the activity, the overall economic activity of a country, and it really shows the health of a country. But the GDP numbers are usually backward looking. We have so many other, we get retail sales and all these other numbers ahead of before GDP. GDP is like a culmination of all those things together, and it's usually backward looking. So it's probably already priced into the market, but still the pound could move significantly on the release of these numbers. 0.2 to 0, okay, that shows that maybe the hiking of rates could slow down the move of the economy. And then we see GDP year on year dropping from 1.3 to 0.6. It's like a 50% drop in the gross domestic product, which will contribute to lower inflation, which would be positive for the market because maybe the Bank of England won't have to raise rates. Okay, and then but now we jump again to the 8:30 U.S. news cycle. We have the PPI, or Producer Price Index, looking more of the wholesale side of inflation. Um, people produce things, and those prices, those input prices, could be higher, but we can see them actually rising from negative 0.5 to 0.1. Core PPI, that means minus food and energy, could drop from 2.4% to 2.2%. And the PPI month on month is supposed to rise from 0 to 2.2%. Now, these numbers, when we're looking at the US flag, we can trade the dollar CAD, the dollar CAD currency. We can trade dollar yen, certainly dollar Swiss, but really the most powerful one to trade, even though the flag is not here, is the euro. The euro is considered the anti-dollar. So if good news is bad news, we could see the euro rally on lower inflation data. But the big boys are going to be positioning themselves in the euro, and you can use whatever system you're using. If you don't have a system, make sure you check out Elite Traders University and check out our masterclass to find out the rubber band strategy and those other strategies as well. And if you want further training and help from myself, a 30-year trading veteran, there's ways that you can get involved with me as well. You can either register for a free strategy call and talk about our advanced mentorship, or you can just jump on to our Forex Power course where we talk about entries and exit. That's our sniper trading course. It's a 6-week course. So whether you want 6 weeks or a year or 6 months, some people need more help, of course, and more help requires a bigger investment. Some people need less help, and that requires a less investment. But we can help you become profitable over time using our proprietary methods and systems, as we've helped many others. Okay, so moving right along, the biggest announcement of all is the FOMC we have the Fed interest rate decision, which is going to be at 2 p.m. on Wednesday, December 13th. Now, that's going to be very important because, it's going to be in the afternoon, so you might not even see very much movement ahead before this number. So if you are sitting in front of your computer and nothing's going on in the morning, realize that people are looking ahead to the FOMC, the Fed interest rate decision, and it's widely expected for them to keep rates unchanged at 5.5%. They've been watching the data. The data has not gotten hot. But if they keep rates unchanged, we could see a very big move in the market, big spike, because if they're done for the rest of the year, then, we might get an initial rally in the dollar, and then the dollar just sells off for the rest of the year. Okay, so we might have an initial. So I wouldn't necessarily, the way we trade the news, we have something called a news fade strategy. And in the news fade strategy, what we do is we wait maybe 15, 20 minutes, or 30 minutes after the announcement to take a position, because usually the market is very illiquid. The big boys are digesting the reports and the analysis that's coming out, and then the volume comes into the market, and then the true direction actually shows itself. So that's the news fade strategy. Okay, and they're going to have, plus they're going to have a press conference, 30 minutes afterwards too. So that's really going to give information of why they chose to either raise rates or keep rates unchanged. Okay, we're not expecting a cut. We're not expecting a cut to maybe like March or something, but it's widely expected for them to keep rates unchanged. A surprise would be if they hiked, and if they did, that could be something too. It could be like maybe one for good measure to make sure that interest rates are going to be kept down. So after that, we're going to have some New Zealand dollar impact news that's going to impact New Zealand dollar for New Zealand, and that's the GDP growth rate quarter on quarter. It's supposed to drop from 0.9 to 0.2. And then a little bit later on in that evening, we have lots of Australia data. So these are the currencies that we would put in our watch list. There are New Zealand dollar, Australian dollar, pulling up those charts, drawing our supports and resistance levels, and analyzing these. So Aussie dollar, Aussie Swiss, Aussie yen. My preference is always Aussie versus the US dollar, and looking at those. With employment change, part-time, lots of employment data coming out, participation rate. So that's going to be on the horizon there. Thursday, we're going to go to the Swiss National Bank SNB is going to release their interest rate decision. Their rates are very low, 1.75. They're going to widely expected to keep rates unchanged at 1.75. Swiss data is almost like Japanese data. Sometimes it moves the currency. Sometimes people just ignore it. But you can take a look at dollar Swiss and see what actually happens with that flag. Moving right along, the biggest one is at 7 a.m. You want to look at the UK, the pound. And this is the Bank of England interest rate announcement, or the BOE. We have the MPC vote. There's a vote for a cut, probably 0. And then they have a vote to keep things unchanged, 6 out of 9. And there's actually going to be 3 guys forecast to vote for a hike. So that's how they have a score, a 3-number score. And since 6 is greater than 3 and 0, well, then they're probably going to keep the vote vote to keep the rates unchanged at 5.25%. And they're going to have their minutes that's going to come out right after that. And the minutes are the meeting minutes to talk to people, tell the people out there how they came about to their decision, how they came about coming up with that decision to keep rates unchanged. But not only that, we're not done. Right after the Bank of England rate decision, not to be showed up, we're going to have the ECB, or the Euro. It's going to have their own their interest rate decisions going to come out, and they're widely expected to keep rates unchanged at 4.5%. Okay, so their interest rate's a little bit lower. So it'll be very interesting to see, if you look at the euro pound exchange rate, to see if maybe the euro pound maybe goes in the direction of the higher interest rate. You're like shorting euro pound. They have three announcements. They have a deposit facility rate, marginal lending rate. Marginal lending rate is like 4.75%, right? So the euro will be in play. So the euro, the pound, they're all going to be in play on Thursday. So we'll see how they're positioned, and we'll see. We'll get some good volatility in those currencies because that's a big, a trifecta of actually a quadfecta, if there's such a thing. The Swiss National Bank, the Bank of England, the European Central Bank, and the FOMC. That's four central banks in 1 week. So it's a very big week. So I couldn't miss Bulls versus Bears. I hope you are getting some good information about this. Initial jobless claims comes out right after that, and that's a big one. That's a very big one. It comes out weekly, and it's supposed to be unchanged at 220,000. And usually, if it comes out a little bit, the more jobless claims there is, usually it's a good thing for the stock market, for risk on assets. Strong job market is usually negative for the stock market because it means that the Fed wants to see softer job numbers, and so that's what they're trying to do because they can lower inflation with fewer people can buy stuff, right? Retail sales year on year, that's a big one that's coming out. This is a big week. Retail sales, 80-something% of 82% of like our United States economy is based on sales, on consumerism. So I know we're dropping from 2.5 to 2.1%. The Fed would love to see that. Less sales, lower inflation, right? And retail sales month on month is supposed to actually remain unchanged at negative 0.1%. Hey, it's negative. That's still, the Fed would say, yes, that's good too, right? And then you have the ECB press conference, and they're a little late. No, it's not. It's about 15 minutes later. Good job. ECB press conference. The euro will continue to be volatile. You'll be able to go in and out of the market as they start, they'll have this long list of things of risks and things that they're looking for. And the euro will go up and down with every word that they say, right? Now, and then we have retail sales out of China coming out that evening on Thursday. And is that it? We should have Friday stuff. Yeah, we have some. Yeah, we're not done yet. I know it kind of cut off. Yeah, Chinese retail sales. Now, remember, even though we don't trade the Chinese currency, the renminbi or the yuan, remember that we proxy currencies are the Australian dollar, New Zealand dollar, because of the geographical location and the trade partnership that they have. Australia supplies iron ore and materials, copper ore for an industrial machine in China. And then also New Zealand is the breadbasket of Asia, providing milk and meat. And there's more lambs and sheep than people there. So it's a big supplier of food to a hungry Asian market. So the Chinese market catches the cold. Well, Australia and New Zealand will catch COVID. This is figuratively terms. Okay. Moving around to Friday, we have the services PMI flash again, this is a French flag. It's part of the Eurozone, one of the largest economies of the Eurozone, including Italy and Germany. 45.4 versus 46. And so that's a rise in there. And then PMI stands for Purchasing Managers Index. And usually that's a pretty strong number for a higher number. A rising number means that the purchasing managers are optimistic. They're going to buy more stuff because they think they're going to sell more stuff. So that's optimistic for the economy. And the certain manufacturing is supposed to, PMI is supposed to rise from 42.9 to 43.3. And we also have Germany has a similar PMI manufacturing, and we have 49.6 rise to 49.8. And then the HCOB manufacturing PMI flash 42.6 will rise to 43.2. That's the forecast. And then moving around along to 4:30 a.m. If you're up that early in the morning, the UK is back at it again We have some manufacturing, service, and composite PMIs, and they are all well, I'll see them on the uptick from 47.2 to 47.5, 50.9 to 51, and 50.7 to 50.9. At 8:30 on Friday, we have the New York Empire State Manufacturing Index, supposed to drop dramatically from 9.1 to 2. Okay, and again, that would really be bad news for the dollar, but good news for our risk appetite currencies and the stock market. And we have global composite PMI flash. It's supposed to actually drop from 50.7 to 50.5. And then we have a softer services PMI flash from 50.8 to 50.6. S&P Global Manufacturing PMI flash supposed to drop, drop from 49.4 to 49.3. And to wrap things up for that Friday, we have the Bank of Canada Governor Macklem's speech, and that's probably going to impact the Canadian dollar. But at 12:40 p.m., most people are probably heading out for the weekend. You know, got some Christmas shopping, so they might not trade this speech. Okay, and then Monday we come back. We're going to have the Bank of Japan rate announcement, right? So we'll talk about that next week. Okay. So let's go into the technicals. You might say, okay, Greg, oh, please, let's get to the technicals. I go, yes, I know. We love the technicals. Okay. So let me go ahead and pull up our technical chart, bulls versus bears, and we're going to pull up. All right. We got some alerts going on, and we've got some gold. We're going to actually start with gold, and we can see that we have this massive run up. You know, we ran up to a new high. We ran up to a new high. We ran up to like 21, close to 20 to 2150 area, and rejected. You know, and this could be looked upon as kind of bearish, long wick, kind of a shooting star candlestick. It hasn't closed yet on the monthly chart, but if it does, then you know, we can see that every time we've wicked up high, we pulled back, right? But we've been pulling back with higher lows, right? So maybe we do pull back when we pull back to trend, right? We have a rising trend, and we have an overall a bigger trend here as well. So let's go ahead and draw again. Because I wrote this ebook, the gold rush blueprint. I'm actually going to start with gold. And why? Because, you know, there's been talk about moving to a central bank currency, the digital dollar. What would the digital dollar do for currency trading in the future? And that's why I've been really pushing trading gold and trading some other commodities as well. Because it's always good to have something else in your pocket. If there is some type of dramatic change, if they start rolling out this replacement for the fiat currency with a crypto or a blockchain based dollar. And so the shiny metal looks very attractive. Okay. At a weekly chart, we can see our shooting star, and we can see a bearish continuation. And prices have actually broken a rising trend line. And we've been taking this short. We've been taking some short trades, south side moves to the break, and made some pretty good money last night. And yeah. So bulls versus bears, you know, we're probably constructively. Let me move this over here. And yeah, we are really thinking about you know, it's not going to move in a straight line. I mean, we got a big rejection here, but I think as we get some more interest data, more interest rate cuts, you know, from the Fed, we're really going to see a giant move in gold. Right now, it's going down, so we've been bearish. Right. So bulls versus bears, we're bearish on gold right now. Actually bearish down to the 1929.81 area, and that could form a nice double bottom there. So we're looking here, bulls versus bears. We are bearish. All right. Okay. So let's go to the dollar index, the US dollar. Dollar state is come back. You know, the dollar reminds me of what Mark Twain used to say: the rumors of my demise have been greatly exaggerated. And here is, we're going to start with our, we're going to remove all the drawings here. Start with this super big monthly chart. And we can see that we've been making some higher highs and higher lows. If you zoom out, we really haven't gone anywhere in the past like 30 years, right? We're still in a range between 121 and 70, and we haven't broken out. But something's going on here where we have this rising uptrend in the US dollar index, right? We had that, and there was a lot of people, including myself, thought the Fed keeps hiking rates, we could we could see like 114, right? But what has happened, we had this rise and this failure, and then price stopped, and we have like a Harami candle here, which is, if it closes here, this is actually extremely bullish along this trend line, right? We have this rising trend line, demand line here, and then so right there, we end up right there, then we could still launch back up to 114, right? We can look at a weekly chart, and we can see price, and this is why there is the little bit of strength that we're getting in the dollar has been taking down gold, taking down a lot of the other currencies as well. And it'd be very interesting to see what happens going into the FOMC meeting. Will we have this a continuation move higher, right? I mean, what we can do is we can drop down to a daily chart, and we can see this is the kind of a V move, that V move, and now we're on the other side of the V downtrend break. I mean, we broke this downtrend as well, and now we're moving higher. We have this big gap, long bar down to the south side, and we could probably see a move. Let me make sure this is muted, and it's not. Okay, there we go. And we can see this move back up here as well, and hopefully you guys can hear me. So we can see this move back up to this. Testing. Okay. Testing. 1, 2, 3. Okay. All right. And let me just move this over here to make sure. And and okay, I don't see anyone in the room. Oh, 3 people are watching. Okay. More. But I can't see the chat box. Okay. I would say hi to you guys. I don't know who's there. Maybe my mom. But thanks so much for being there. All right. So here we go. So we're on this side of the trend line, and so now we're making these new highs here, higher highs and higher lows here. And now, I mean, we could walk this up, especially if we get into into January. We start getting the tax loss selling and things like that, and the Fed. That's the big thing, and we look at the 4-hour chart. We can see that maybe we got a double top there. Maybe this is all she wrote right here, right? But sometimes what we have going on here is inverted head and shoulders here on this 4-hour chart on the US dollar, right? And the inverted head and shoulders is a bullish pattern, right? So I mean, we need a break above 104 for this to continue, and if we do, then we could probably fill this gap here, and so that would this would see a move, possibly we could see a move back up to here, back to the 105.50 area, right? That would fill in this gap right here that we had, and that's what we were. See this gap down, right? Usually prices, there's a rule of symmetry where what happened on one side will happen on the other side. So we have this gap, and then we have the time that it took from the middle. So we take a middle line there, and we can go here, put that in the middle here, right? And we can measure in time from here to here. We can measure and from here to here, and that was 65 bars, right? About almost yeah, 65 bars. So you divide that by 4, right? It was 6, like 10 days. And then this is 57. So we're almost equal. Yeah, this is like the equal time that we're, this the time it took to go from down to the middle part and the middle part back to the same area is equally equivalent in time. And so we could see this move. So bulls versus bears. I am actually I'm bullish the US dollar. Okay. Let's go ahead and move on to let's take a look at what's going on with the euro. The euro is the anti-dollar EUR/USD, and then we'll also go up to the monthly chart, right, and so we can see that we see it's very interesting here. We got this kind of we've been we still have this downtrend, just down. It's been going down, but then we make a little bit of where we just move sideways to up, a little bit of a push up there, and we can see that that the euro has been hanging around basically in a range. It hasn't really gone anywhere, hasn't really made any new highs, hasn't really made any new highs, hasn't really made any new lows. We've just kind of been stuck there from the beginning of 2023 all the way up to now, almost a year. We've been stuck in this box, and so that's kind of we haven't really gone anywhere. So it's very much indecisive, and we have to go to lower time frames to actually find some type of action. And then you have maybe some type of a bearish head and shoulders, a big higher high, a lower high, and if we can, we could break through down to this trend line. We have this kind of evening star, shooting star kind of pattern here. We come back down to maybe the 106. We're currently at 106, 107.63, and then maybe the 106 area, maybe where the euro wants to go, right? Especially if the dollar is heading up, right? We go back to a daily, and we can see. I'm going to move Mr. Box out of the way because it's pretty bright. And you can see how we're on the other side of the trend right now. We broke the trend line, heading down, and so we might maybe even see some more. So bulls versus bears, I'm bearish on the euro, right? Let's go ahead and go to the GBP USD. And see, now they kind of like, you can look at, this is our nested action here on the and we got a nice little morning star pattern here on the monthly. Weekly kind of it kind of peters out, and but still has an uptrend. We still have some an uptrend bias. You know, the Australian dollar is the currency of global growth, and usually when the stock market is going up, it's usually tracking the stock market, and we're getting a little bit of a pullback, and we're getting some type of a flag pattern in this on the I'm sorry, this is the pound dollar, not the Australian dollar. Pound dollar. And we're seeing this kind of like support area coming in at 125.53, right? And we need to break through that. Now, we still have this trend that's still kind of looks like it may give us another shot back up, maybe when it starts flagging out like that, where price is not going straight down, but it starts slowing down like it wants to turn. It's like turning at this trend line. And so maybe we get another shot up to another test of the highs, maybe one more, maybe another test of the 27.32 area, you know, and that's probably some type of a Fibonacci retracement area where we can see, that's a 61% retracement there, right? So we might get another tag there before we're moving lower. All right. So I'm actually cautiously short-term bullish here. Right. But we can go back to a 4-hour chart and you can see We're still making these lows. We're coming up a rising trend line, and we're slowing down. See, as we get closer to that trend line, I'm going to move this Fibonacci out of the way. That the wicks, we start getting wick candles, small body candles, and it's kind of struggling as maybe buyers want to turn this around, right? And so if we get a break above 26.14, look for a move to 27.32. Okay. Let's go to the Australian dollar, AUD USD, right? And we'll go take a quick look at that. And we'll look at that on a monthly chart. I'm going to remove all these. You can see we really haven't gone anywhere, right? Remove drawings. You can see that we've been in a sideways consolidation, and we really haven't gone, you know, we get down. We have a double bottom here, which has been constructive for the bulls. It's like a shades of gray double bottom. We didn't quite get there. It was like we turned very sharply. There we got bullish engulfing, right? So we're making higher lows, which is constructively bullish, right? Higher low, right? So this is a bullish trend line, all right? In fact, I can make that even green just to kind of like keep us on the right side. But we also have descending highs, right? So there you go. So there's your descending. And these are triangles are like indecision. They are our indecision areas, right? Because we have bullish and bearish forces converging. And when we have the breakout, that's when we have the final decision that's being made, right? So we're sitting here and in the sideways. And since we do have a rising trend line and downward trend line, I would go, let's try go down another time frame. And we've got lots of thrusting green candles here using our template, going up to a daily. And then we can see that we do have our daily trend is up. We do have a daily trend that's moving higher. We're at the 65, 66 area. As long as we can stay above 65, the figure, we could see maybe some higher highs. But I would probably say we get back, maybe just before FOMC, might get a rally, a little pump and dump, or that's what I'm thinking, that we would see something like that. If we can break above this high, then the dollar may be on the back foot, and we could even get back up to 68.99, almost 69, and maybe make a run. We got this gap that has not been filled at 71. Maybe we get a run back there, right? But there's lots of downward pressure for a retest of the low here. We just want to see what transpires here. Okay. So let's go ahead on our next currencies that are. We did look at the Aussie. We looked at the pound and the euro. We have big time central bank announcements from 4 central banks that are poised to rock the markets with their non-announcement, right? That you think if there is no change would still create a lot of activity, right? And so basically, we're looking at the euro, and the pound, the Australian dollar, New Zealand dollar. That's the last one we'll look at, and that's probably going to track the Australian dollar pretty much the same. And you can see we traded that a lot during our winner's circle meeting. Let me go ahead and remove all drawings. Here we go. Yeah, and here we go. So we're using trading view charts, and we can see on this monthly chart, again, we really haven't gone anywhere fast. We got a high about 67, no, 74.70, and we get a low here. And we're just moving sideways. I mean, we're going into the end of the year, and we get a big run up, big run down, and then we have a higher low. So we do have a higher low. So now this is pointing like we might get some type of a Fibonacci expansion, like an ABC, where we can take a base projection from the high to the low, do something like that, and maybe get a move back up toward the 68.23, all the way maybe to the old high of 74.70, right? But I'm thinking more, there's kind of a gap down that hasn't been filled yet at 68.50. Right. So we may see some type of a move there. And then the dollar strength kicks in. So I'm really like short-term bullish, but medium to long-term bearish. Usually when we have that kind of a pattern where we pop a wheelie like that, we're like kick, like it's like a motorcycle on a wheelie, like it pops a wheelie. We usually go up a little bit. It's like an up move and then a down move. So it's actually like a bearish formation. It looks bullish, but it actually has a bearish slant to it. And so it's kind of counterintuitive because you think, oh yeah, it's pointing up, and then you get this big move. They think it's going to go to a new high, and then it just turns around and just drops, right? Like, right. So you see that retest, because I'm thinking we never got that test of the low. I know I was trading with my group the other day, and we were trying to target that old low, and then that thing just kind of turned really fast because we're looking for not there. We're looking for a retest, and it never did. So, bulls versus bears. Again, I'm short-term bullish, and medium-term bearish. Okay. So with that, ladies and gentlemen, I want to thank you so much for joining me for Bulls versus Bears. I hope you found this useful and informative. Make sure you like, subscribe, and thumbs up this video. That way, the algorithm can pick it up, and other people can benefit from my analysis. And also check out our Gold Rush Blueprint. We're having a massive sale going on here for our right here. You can go to the inner circle, the goldrushblueprint.com, and check it out. And come on in. We have a great amount of material on how to trade gold, and there's lots of good things going on. Okay, so I'll talk to you soon. This is Dr. Greg signing out. Remember, peace and pips. Love your neighbor. Keep your stops close and your friends closer. Talk to you later. Bye-bye.